Welcome to the Bridge Podcast, where we connect you to real estate, business, and global opportunities. And more importantly, we connect you to how smart investors actually think. Because the truth is, real estate is not just about what you buy, it's about where you position yourself before you buy. And today, I want to talk about something most investors skip: position. And this is important because this is the P in the PIER model, the same framework we teach inside our Philippine Capital Shift seminars and investor workshops. Before you ever ask, what property should I buy? You need to ask a better question. Where should I be positioned? Because in the PIER model, position, infrastructure, entry, regulation, position always comes first. If you get position wrong, you will feel like you are forcing every deal. But if you get position right, even a simple property can perform. So, what does position actually mean? It means this: you place yourself where demand is already forming or about to form, not where it's cheap, not where it's hyped, but where three things are happening at the same time: jobs, population movement, and lifestyle. Let's start with the big picture. The Philippines today has over 112 million people and about 94% employment. So demand exists. That's not the question. The real question is, where is demand concentrating? First, jobs. Jobs are everything because jobs create income. Income creates households, and households create real estate demand. Right now, job concentration is strongest in Metro Manila, Calabarzon, Central Luzon, and Cebu. Now let's talk about income because this is where position becomes very clear. In Metro Manila, average income is around 29,310 pesos per month. In Calabarzon, around 19,700 pesos. And in Central Visayas, also around 19,000 pesos and above. So, what does that tell you? Income is not spread evenly, it is clustered. And where income clusters, demand follows. So, immediately, position tells you Metro Manila is still your demand anchor. But here's where smart investors level up. They don't just look at the center, they look at the movement around the center. Second, population movement. By 2035, Calabarzon is projected to reach around 19 million people, Metro Manila around 14 million, Central Luzon around 14 million. This is what we call the Mega Manila growth pattern. People are moving outward to Cavite, Laguna, Rizal, Bulacan. Why? More space, better affordability, better quality of life, while still staying connected to jobs. So these areas are not just alternatives, they are strategic positions. Now let's make this real. Let's talk about Clark. A lot of people say Clark is still developing, but the data says something different. Clark already has over 145,000 workers, more than 1,200 companies, and nearly 3,000 job openings in a single hiring event. That's not future demand. That's existing demand with future upside. That is position. Now let's go to the third driver: lifestyle. Because people don't just move for work, they move for a better life. Shorter commutes, walkable communities, access to malls, schools, and hospitals. That's why areas like BGC, Makati, Ortigas, Cebu IT Park, Cebu Business Park continue to outperform because these are not just locations, they are complete ecosystems. And ecosystems create stronger rental demand, lower vacancy, better resale value. Now let's go one level deeper. The Philippines BPO industry has grown to over 1.8 million jobs and about $38 billion in revenue. Economic zones support around 1.7 million direct jobs. So when you invest, you need to ask, is this property connected to real jobs or just marketing? Because position is always tied to real economic activity. So let's simplify this. If you're investing in the Philippines, always evaluate these four positions: Metro Manila, Core, Calabarzon, Belt Clark, and Central Luzon, Cebu, and Central Visayas. Each one plays a different role, but all of them are rooted in position. So here's the shift I want you to make. Stop asking, what's the best deal? Start asking, am I positioned where demand is growing? Because position determines your tenants, your risk, your appreciation, and your long term success. And here's the truth: you don't win in real estate by buying cheap, you win by being in the right place before everyone else sees it. So the next time you're looking at a property, pause, zoom out, and ask yourself, am I chasing price or am I following position? And if you want to go deeper into this, this is exactly what we break down step by step inside our Philippine Capital Shift seminars. This is where we teach you how to apply the full PIR model. So you're not guessing, you're investing with strategy. If you're serious about investing in the Philippines and you want to position yourself the right way from the beginning, I invite you to join us. Connect with us through your global connection, book a strategy session, or attend one of our upcoming investor workshops, because the goal is simple: not just to invest, but to invest with clarity, confidence, and correct positioning. This is the Bridge Podcast, where we don't just connect markets, we connect you to wealth, wisdom, and world class opportunities. And remember, you're always just one connection away.